Hi there, it's Bill with Smart Trades on January 27th, a couple hours before the close of the stock market. And last time on the 13th or 14th, I had mentioned that we were very close to a top at the top of the wedge, and indeed that we might have one more new high, and that is exactly what happened. We didn't quite reach my target in the S&P, which was 1159. We peaked in the low 1150s, and we're also about 30 points shy of the ideal target in the Dow, but very close. And from there, we've carved out 5 waves down, an impulsive pattern, and the implication of that is that indeed the top is in. At this point, it's interesting to see that we are at the bottom of that previous congestion around the 1084 level basis, the S&P. That's an area where obviously there's been support in the past, and we could be seeing some support now. Additionally, the pattern is a short-term terminal. In other words, we probably should get a bounce. And the ideal target internally is about 1083, and again, that support is around 1084. Additionally, we've got bullish breadth divergences and as well as momentum divergences. So the possibility for a bounce here is pretty good. But the big message is that the top is probably in, and this market, once it does make its next turn, has probably got a long way to go to the downside. But we'll take it one step at a time. Like I say, the next thing here is perhaps a bounce. Ideally, that bounce could take us back to 1120 or so basis the S&P cash. 1120 was a long-term target, and it's also the top of that previous congestion. And it's about a 50% retracement of this move down. So that's what I'm looking for at this point, a bounce towards 1120, give or take, but we'll get that more precise as we move up. We want to see how it plays out, but 1120 is the near-term target, and that would be a big-time sell if it were to get up into that area and fail. Now let's take a quick look at the Dow, and similar circumstance in the Dow. We're ideally about 10,079 would be the 1 equals 5. We did get a little bit below that congestion area, but the main message here is that there is indeed 5 down. That confirms the top, in my opinion, but again, we'll watch to see how the rally unfolds. And interestingly, 62% of this decline comes in around the 10,500 area, which was a target in the past and is also the top of that congestion. So that would be the target for a rally in the S&P, at least at this point. And again, we'll try to refine that as we rally up, if indeed we do rally. 10,500 on the Dow. Quick look at the longer term picture. We have not only broken that short term trend line, but we've broken the long term trend line. This is the S&P continuous mini futures, and you can see that wedge pattern was not only working on the short term, but it's also working on the longer term weekly pattern. The implication of this chart is that the entire rally off the March lows is corrective. By definition, if this is a corrective rally, then new lows below the March lows are forthcoming. Again, we'll take everything one step at a time, but just to take a look at where we are in the bigger picture, exactly how low we're going to go, we'll have to see. But the implication of a corrective rally, if indeed this is what it is new lows, and that's well below the 700 mark on the S&P. Okay, gold. Gold is very much following suit with the stock market. Ideally, we're going to go just a little bit lower, then we're going to bounce back up towards, say, 1130 or so in gold, and then down in gold as well. I believe that this is probably a major turn in gold also. So a rally back towards 1130 I would see as a sell. And the dollar index is exactly the mirror image of the stock and gold markets, in that you have impulse waves up rather than down. It looks like we've got perhaps a little more rally, perhaps not. We have a potentially terminal pattern already in the dollar, and then perhaps a decline to 77.50, perhaps 78. If it holds there, the next move should be a pretty big move up. And finally, here's crude oil. Crude oil is a little more dicey in terms of the short-term picture. The wedge pattern is still very, very much apparent, but I'd be looking for a rally perhaps back to 80. It could go back to the top of the wedge, hard to say, but the big picture is that either way, the next big move is down, and again, down below the 2009 lows. So a pretty significant move should be on the horizon for crude, but we've got to let this one play out as well, and then we'll look to sell crude. Anyway, thanks for watching. Have a great day. Bye-bye.